evening, traders from across the globe, and welcome to the 960th installment of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, 960 instructional videos we have done for you. We try to do these almost on a nightly basis. These videos are geared to tell you what should happen tomorrow in the market, the S&P, NASDAQ, futures markets. That's what we're about. As I said, I'm Oscar Carboni. This video is being filmed on Sunday night for Trading Sunday through Monday, December 17th, 2012. Traders, you know, this game is extremely risky. Futures trading is extremely risky, can cause substantial financial loss, and is certainly not suitable for all trading accounts. If you don't recognize that a stop is your best friend, and if you don't have risk capital to lose, you should get up and run, because if you don't use stops, you're a nut and you shouldn't be in this game. For the rest of you omniacs out there that understand the risks, let's get ready to rumble, because we are going to rock and roll today, traders. All right, on December 17th, this is what we're expecting. We have a red Omni, mostly Apple pulling this market down. S&P and NASDAQ should move lower on Monday the 17th, but I'm going to start off with the bottom of this board first. Traders, do not fall in love with the downside. Do not fall in love with the downside of this move. We are in an inverted head and shoulders pattern in all of the U.S. indices. An inverted head and shoulders pattern is a bullish pattern. It's, you know, if you could draw circles around the market that's moving, it's a market that moves up and comes down and plays around and goes back up. This is an inverted head and shoulders and is bullish overall when the formation completes itself. We have bullish formations like this one, the bullish inverted head and shoulders in S&P, NASDAQ, the Russell, the tranny, the industrial average. It's all over the place. So we know that the markets do want to go up overall, looking week after week. But we're day traders and we're looking for what's going to happen tomorrow. Now, if you remember Thursday night for Trading Friday, I came out in front of this board on Thursday night and I said, the NASDAQ, because it's basically Apple's slave, the NASDAQ is Apple's slave. We call it NASDAQ. And 6 times a charm. And I told you the NASDAQ's going to come off because it's got on those inverted shoulders. It has 6 times it hit up here and then dumped. And we were at 5 times on Thursday night. And I said to you, I don't like it. I think we dumped. And what did we do Friday? Rock and roll analysis. We dumped in the NASDAQ and the S&P. So this is exactly what was on the board Thursday night for Trading Friday. And I told you that Apple computers were in a repetitive pattern and that they would continue in that repetitive pattern and Apple would go down and take the NASDAQ with it. That is exactly what happened on Friday, and it's what we expect to happen going into Monday, through Monday morning, maybe into Monday afternoon. Now there is this, traders. Do not fall in love with the downside, because not only are we in this inverted head and shoulders, so overall, intermediate term is bullish, there are literally trillions and trillions of dollars on the sidelines. Fund managers across this country are praying that we come up to some sort of an agreement on the fiscal cliff, so come January 2nd, they can flood that money into these markets. I am telling you, do not fall in love with the downside. We are only going down now because of the uncertainty of the United States and the fiscal cliff. The moment Washington says we've got an agreement, you are going to skyrocket in our U.S. indices. They're set to go higher. They have bullish formations, trillions of dollars on the sidelines. So that's a little bit longer term view. For tonight, Sunday night into Monday, we've got a red Omni. We expect NASDAQ to be pulled down by the Apple. And we will not fall in love with the downside, but the downside is what you should expect, at least at the onset of trading on Monday. Now, we're going to get short. It's going to go down. Hopefully, we're going to get out and sidestep this, because I know that it is bullish overall, so we're being very nimble with our short trades. I want to be clear about that. Now, traders, If you like the analysis that I put forth in these videos every night when I give them to you, if you like the analysis you are about to see in our chart segment, then you should join me in a 4-day training session held here live in Las Vegas called OMNI Camp. OMNI Camp will be held the last week of February this coming year, 2 months from now, February 22nd through 25th. If you would like to come join me here in Vegas for a 4-day training session with me personally, then you fill out the OmniCamp application at livewithoscar.com. Fill out your OmniCamp application and I will personally call you and qualify you, see if you make the cut to come study with me for 4 days. Now, traders, I'm going to receive dozens and dozens of these applications. I will only take 5. I will only approve 5 of you. Please fill out your applications and allow me to call you and question you and see if you can come on down to an Omni Camp where I can teach you how to read these charts the way I read them myself. Traders, with no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another Omni Camp live in Las Vegas. Omni Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Traders, Dow Jones Industrial Average Daily Bar Chart. This has been updated up until Friday's close. We are looking at it on Sunday evening for trading Monday, December 17th. Look what happened. You had a wonderful parallel channel. Well, on Friday, the channel was breached. We settled here and we failed at OTAPMA, the Omni Trading Academy's proprietary moving average. We fail at OTAPMA. We break below the parallel channel. If you are a day trader, you have no choice but to look at that as bearish. Let's move forward. E-mini S&P traders testing OTAPMA right now, but remember this picture. This is your inverted head and shoulders. This, my friends, is a bullish scenario overall. We are testing OTAPMA. We are not below OTAPMA. We haven't broken OTAPMA. We're testing OTAPMA right now. If we hold above, the days are very limited before we go up, but we are day traders, and this is what we would expect for tomorrow. At least 1 day down. We will take this 1 day at a time. So for trading on Monday, December 17th, we expect at least the morning to be the downside in the E-mini S&P. And once again, traders, do not fall in love with the downside here. If we did not breach the 200-bar moving average in the NASDAQ on Friday, I don't know I'd be so quick to even want you to sell this. But we did breach the 200-bar moving average. There it is. We dropped all the way to here. We're about to come out of the bottom of this inverted head and shoulders. Maybe you'll get some sort of a head test down here. You never know. Another day or two down before the rally begins. But overall, this is a bullish formation. And if we weren't below the 200-bar moving average, I do not think I'd be selling it. But then there's Grandpa traders. And this is the one that does not let Apple get away. This is the one that does not let NAPLDAQ or NASDAQ get away. This is Apple. Now, I came out here on Thursday evening and showed you a repetitive pattern. And I said, left shoulder, head, right shoulder, inverted, which is bullish. And it led into a parallel channel, which is right here. Then we went shoulder, head, shoulder, and I called a top. Right in the first week of October, we called for the market to top out. It certainly has topped out, and it went into another parallel channel, right? So boom. So we went shoulder, head, shoulder, parallel channel. Shoulder, head, shoulder, parallel channel. Then we did shoulder, head, shoulder, and I came out on Thursday evening and said, now we start to go into the parallel channel. This is what happened Friday. That's Friday's bar. This was Thursday's bar. That's Friday's bar. We are in that channel and looking like it wants to go lower. Houston, we still have a big problem in Apple, and if Apple has a problem, NASDAQ is not going higher. So, traders, you've seen the charts. There it is. There is the red Omni for starting off trading on Monday. Fill out your Omni Camp applications. Come join me the last week of February for my Omni Camp. And come on down to livewithoscar.com where you'll find me in my live trading rooms. Don't trade alone. We have free trading rooms for you. Come on down to my free trading room and allow me to help you become a better analyst. Traders, last but not least, keep your emotions at bay when trading. Emotions are the worst thing you can do when you make trading decisions. If you let this get involved in your trading decisions and this get involved in your trading decisions, you are dead. Use the charts. The charts rule. They are the Bible when it comes to trading. Keep your emotions out of it. One of the best things I can do to help you with keeping your emotions at bay is to tell you to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll video number 960. Do not fall in love with the downside, but watch out for Apple pulling us lower. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.